Inflation is back in the Reserve Bank's target band, but no rate cuts are on the horizon. Negative gearing and capital gains tax changes are being looked at yet again, and the Treasurer is off to China to repair relations with Australia's biggest trading partner. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 26th of September 2024. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, the main story this morning, CPI was up 2.7% in the 12 months to August, with new data showing us that on a headline basis, we are back in the Reserve Bank's inflation target band of 2 to 3%. But, that all sounds terrific, doesn't it? But it doesn't look like the RBA is going to cut rates anytime soon.
No, it doesn't, Michael, and it's a really interesting set of figures this month because the big downward factor on the headline number was, of course, the state and federal government's big energy subsidies, and they mean we're paying less for our electricity. This was largely as expected. As you mentioned, Michael, because these are temporary measures, the Reserve Bank of Australia tends to look right through those. They're more interested in the underlying inflation figures, and they strip out temporary and volatile items to better understand how inflation is tracking as a theme. And on this basis, there has been a bit of progress. The Consumer Price Index was up 3.4% in the 12 months to August. That's down from 3.8 the month before. Petrol has come down to cyclical lows, and that is helping. There's still little expectation for the Reserve Bank to cut rates when it meets next in November, as this is still too high for its 2 to 3% comfort level. However, it is the best result we've seen in 2.5 years, Michael, so that is some good news. We know this particular measure of inflation is a lagging indicator, meaning it looks at historical data so that observers will keep a keen eye on new and forward-looking measures.
I love that whenever you and I do this show together, Adam, there is an unspoken battle being waged between us. Here I am referring to CPI, and you take the time every single occasion to spell it out. It is Consumer Price Index. It is not CPI.
Well, imagine if you're a new listener, Michael, and these world of acronyms and initialisms and abbreviations and slang, I want to remove it. It's my personal quest.
The worst part is, I think you're right. It actually hurts to admit that. Anyway, let's move on. The government. How did the government react to the numbers? Because really, inflation is such a big political story as well.
Well, as you can expect, Michael, it was, and there was a reaction. Federal Treasurer Jim Chalmers described the drop as welcome and encouraging, and it said that it proves that the government's policies are helping the fight against inflation. Still, they want to see it moderate further and faster in quarterly terms. That is very important because the monthly figures are more volatile than the quarterly data. Services inflation is 3 times goods inflation, and that remains a big challenge. The government has come under fire from Nationals leader David Littleproud, who said yesterday morning that it was using its policies to try and paper over the cracks to hoodwink the Reserve Bank into easing rates.
Coming up after the show, Adam, you have an interview today with our resident economist, Stephen Koukoulas, who always has such a brilliant knack for just cutting through everything and explaining exactly how we should be interpreting these figures.
Stephen swims around in this data all the time. He knows it so well. He knows the themes of it and what the Reserve Bank's looking at. So I find not only his knowledge of the data, but his interpretation and analysis just exceptional.
Yeah, indeed. So stick around for that one. It is coming up a little bit later on. Local markets, how did they perform yesterday?
The S&P ASX 200 closed down 0.2%. to 8,126 points, and that was after a pretty volatile day of trading. The top performers by quite a stretch were metals and mining, materials and resources. Champion Iron was a top performer, up 13.5%. That's big. BHP was up 3.8%, and Fortescue Metals was up 4.7%. Those are big numbers. China's central bank cut its one-year rates on the back of a new government stimulus package, and that explains some of the optimism, particularly for iron. The falls were a mixed bag, with financials leading the declines, followed by information technology. Among the worst performers on the day were the banks, led by National Australia Bank, which was down 2.7%.
Adam, just speaking of the banks, how about Macquarie? A record fine from ASIC.
Yeah, this was a slap, Michael. Macquarie copped a 4.995, let's call it $5 million fine by the corporate regulator after it found it had failed to catch dodgy electricity futures transactions. This involved 3 clients on about 40 occasions in the months after Russia invaded Ukraine. It netted the clients 23.4 million more than they would have got from trading within the rules. Their shares ended the day flat. And just quickly, Kathmandu and Rip Curl owner KMD Brands has posted an 11% drop in sales in the financial year 23-24 amid a, quote, challenging sales environment. Their shares fell 1.1%.
And what's happening in international markets?
Plenty, Michael. The Aussie dollar briefly pushed beyond 69 US cents yesterday on the back of the interest rate differential between the local currency and the US dollar. Brent oil and gold prices are flat. Iron ore has come back a touch after yesterday's spike, and Bitcoin is trading above US $64,000 a unit. And moving on to Meta, Michael, they had an annual 2-day Connect conference starting today with CEO Mark Zuckerberg due to speak. The markets are focused on what he says about AI and how it will be used by Meta.
Adam, a quick mention, if I may, as well. I know that the Meta conference today is very important. Also very important, I would say equally important, is the fact that there is a new episode of our new podcast, The Property Pendulum, brought to you by Domain and Fear and Greed, which is the podcast that tells you which way the property market is swinging and how to make the most of it. And Adam, I know that you will be very excited to hear today's topic. We are talking about auctions. It is
spectator sport.
Oh, yeah. The bidder's guide to winning at auction. Because obviously, auctions can be...
It's a cauldron, Michael.
Oh.
It is an arena.
It can be fierce.
Have you done it?
Yes.
God, how much pressure.
It is both terrifying and exhilarating.
Yes, I agree.
Like it is.
And that's even if you're not bidding.
Yeah. Even if you're just the spectator, it is terrifying and exhilarating. But if you are bidding, there are all these questions like, should you open the bidding?
Yes.
Where do you stand? Do you stand right in front of the auctioneer, or do you stand on the side, or do you stand at the back of the room so that you can see everyone else who's bidding? How big are your bid increments? Kind of what happens if the property passes in?
Do you get someone else to do it for you?
Absolutely. We go through all of this. So this is Alice Stoltz and I, Alice Stoltz, the national property editor at Domain, and we go through everything. And obviously Alice knows this space so well because she has been doing it for so long and just is, I would say, Australia's foremost expert on all things property. So enough about that. I could rabbit on about it all day. I'll put a link in today's show notes to the new episode of The Property Pendulum, which you can also find wherever you listen to podcasts.
Nice work, Michael. I'm looking forward to it.
Adam, we will take a quick break. I will catch my breath and we'll be back in a moment with the rest of the day's business news. Adam, federal officials have started work on options to scale back negative gearing and capital gains tax concessions, and have started work on a major new housing policy ahead of the next federal election. I know this is music to your ears because it sounds like reform.
It smells like reform, Michael. And I must give tribute to Sean Aylmer's Fear and Greed newsletter yesterday too, because the way he put it about flying political kites and seeing what's happening, I think that's very interesting here. And make your own mind up as you listen to this story. The Albanese government refused to confirm reports in the 9 newspapers that it had directly asked Treasury for expert advice on the possible changes after years of dispute over billions of dollars in annual tax benefits. However, it did confirm that the department was undertaking some work on these issues. It's likely to become a major political issue, with the coalition warning against any changes and the Greens demanding an end to the many tax breaks. Earlier this year, Federal Treasurer Jim Chalmers flagged a public conversation about $250 billion of annual tax concessions, and analysts have estimated that overhauling Australia's capital gains tax system could improve the budget by $5 billion annually. But we know, Michael, that this is political dynamite. The report yesterday morning triggered an immediate reaction from Liberal Senator Jane Hume, who accused the government of lying to the Australian people. Shadow Treasurer Angus Taylor criticised the government for wanting a tax on housing. But Chalmers was brushing off the speculation yesterday afternoon, saying the government has a property policy and that's not in it, adding it wasn't unusual for the government to get advice about issues that have been speculated on from departments.
And just sticking with the topic of Jim Chalmers for a moment, the Treasurer is heading to China today for a series of pretty high stakes meetings, really, with key counterparts at Australia's major trading partner in a 2-day blitz, Adam.
Yeah, Michael, and this is a bit of a first because it's the first time an Australian treasurer has been to China in 7 years, and it's at a time when the Chinese economy is sputtering a bit and there's market concerns about the effect on other economies, and that is including our own. Chalmers said at a press conference yesterday that the meetings would be an important step towards stabilising the relationship and re-establishing dialogues with Beijing. He's co-chairing the Australia-China Strategic Economic Dialogue later today, and he told media he's consulted with a raft of chairs, CEOs and senior executives at Australian businesses and institutions with major links to China ahead of this trip, and they include Rio Tinto, Wesfarmers, BHP, Fortescue, KWM, Cochlear, Sydney Airport, GrainCorp, the University of New South Wales and the Business Council of Australia. That's quite a good sample, I think, Michael.
Yeah, it certainly is. I will just point out the fact that you didn't spell out what CEO stands for, even though you...
My apologies, everyone. Chief Executive Officers.
Oh, thank you. I just wouldn't want you to be inconsistent, Adam.
Thank you for keeping me in line.
That's one of my main purposes, my main reasons for living. Billionaire Solomon Lew's Premier Investments will postpone its planned January demerger of its kids' stationery brand Smiggle as it focuses on a deal to sell its retail apparel brands to Myer.
Yeah, Michael, the retail giant is pushing ahead with a potential spin-off of its sleepwear clothing chain, Peter Alexander. I know that's a favourite brand of yours. It comes amid worsening trading conditions for retailers. Premier Investments said that while there is still merit in the potential demerger of Smiggle and Peter Alexander, the board was instead prioritising a deal with Myer. In a trading update, Premier's sales have fallen 3.5% for the start to fiscal 2025. Smiggle suffered a 7.4% drop. Premier Investments posted a net profit of $258 million for the 12 months to the 27th of July, and that was down 5% from last year. Its share price fell 9.1%, and it was one of the worst performers of the day.
This is an interesting one, Adam. Fortescue Metals will pay $2.8 billion to replace 2/3 of its fleet of haulage trucks and equipment in Western Australia with electric versions as it seeks to cut diesel consumption and meet some pretty ambitious emissions reduction targets.
Yeah, Mike, all part of greening the economy. The miner will buy 475 emissions-free machines, and this includes 360 autonomous battery electric trucks. They'll be bought from Germany's Liebherr Group, according to Bloomberg. The fleet will service Fortescue's sprawling iron ore operations in the Pilbara. Perth-based Fortescue has plans to decarbonise its iron ore mining operations by 2030, but it is a challenge. Fortescue consumed 631 million litres of diesel last financial year alone. Emissions from stationary energy, which includes emissions from direct combustion of fuels in mining, that accounts for more than 20% of Australia's air pollution, according to the government. And earlier this month, Michael, Rio Tinto announced it would plant 750,000 trees and test biofuels as a replacement for diesel.
That is indeed a lot of trees, Adam. Now, the nation's top research universities and private and vocational providers have been hit hardest by Labor's push to cut international student numbers, while some regional institutions have actually had their allocations increased.
Yeah, Michael, the education industry is huge in our country. Vocational education and training providers will have their numbers cut by 32% as part of the federal government's effort to limit international student numbers to 270,000 next year. Data tabled in the Senate shows that private universities and non-university higher education providers will have their number cut by 26% overall compared with this year. The group of 8 universities will have their allocation cut to 57,950, and that's about 28%, according to a report in The Australian. The data also demonstrated the government's effort to boost international student enrolments outside major cities to free up housing supply, with regional universities network allocated 76% more places than this year. Every regional university was granted a higher cap than its level of 2024 commencements, with Charles Sturt University, based in regional New South Wales, receiving a cap of 1,000 students after it enrolled only 343 students in 2024. That's marking a 192% increase.
Okay, turning to international news now, and Donald Trump has warned US trading partners that they would be, quote, losing their jobs to America if he wins a second term in the White House, as he promised a new American industrialism under his watch.
Yeah, Michael, it's a big domestic pitch. Mr. Trump's version of US industrial policy is centred on a promise to cut taxes for companies that manufacture in America and impose tariffs on those that do not. He said, vote for Trump and you'll see a mass exodus of manufacturing from China to Pennsylvania, from Korea to North Carolina, from Germany to right here in Georgia. His push on foreign investment comes as Democrats warn that his plans to gut the clean energy subsidies from Biden's Inflation Reduction Act would damage a recovery underway in industrial America. That act is particularly relevant to us here in Australia. Many of our companies are in the critical minerals supply chain, with some ASX-listed organisations already benefiting from it.
Finally, Adam, the new British Prime Minister, Keir Starmer, who's only been in the job for 2.5 months. He was appointed Prime Minister on the 5th of July this year. But he is already earning a reputation for gaffes, including a particularly horrific one in the last few days when he referred to Israeli hostages as sausages.
Yes, in a speech to Labor's annual party conference, Keir misread his script, unfortunately, which called for the return of Israeli hostages. He said, I call again for an immediate ceasefire in Gaza, the return of the sausages, the hostages, and a recommitment to the two-state solution, ... Michael, as you said, he was only elected on the 5th of July, so the honeymoon for Keir was short. And in recent weeks, he and his ministers have tried to fend off repeated questions about lavish gifts and hospitality he has accepted in the past year, including football freebies and money to smarten up his wardrobe and that of his wife. Although Labor still polls ahead of the Conservative Party, Keir's personal popularity has dived 45 points since July. In an opinion poll released on Sunday, he scored a net approval rating of minus 26%.
Yeah, he's off to a pretty rough start there. All right, up next is two pieces of great listening this morning. First is the new episode of The Property Pendulum, brought to you by Fear and Greed and Domain, all about auctions, how to bid at them, a bunch of different strategies on how to set yourself up for success at an auction, regardless of what the market is doing, because it really does affect the way you are going to bid at auction. So check that one out next. After that, Fear and Greed's resident economist, Stephen Koukoulas, weighs in on the inflation data, interest rates, all of it. There is so much good listening in the Fear and Greed playlist. You will be spoiled for choice, Adam.
Enjoy it all.
Indeed. Thank you very much, Adam.
Thank you, Michael.
It is Thursday, the 26th of September, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.